Hey everybody, how's it going? I hope you guys are enjoying San Antonio. I am Brandon. I am, I guess, the founder of Green Candle. It's a media company around Bitcoin and finance, macro, real estate, all that kind of stuff.
So you just got done with y'all's meetup. How'd that go out there?
Yeah, it was good. We had I'm in Tampa Bay. I'm from Austin originally, so not too far from you guys. But the meetup down here, we kind of do a little unique format, I guess. Like, so we do two socials a month. We meet like once a week. So two of them are socials. One's a bit devs, and then one is more of like a workshop. So yeah, this was a social one. So I kind of just went there. I got some Bitcoin trading cards when I was down in Pacific Bitcoin, so I handed a couple of those out. And yeah, man, and just kind of it was good. Yeah, just getting to see everybody kind of on a weekly basis because I've been out of town a little bit, so it was good to be back in the swing of things.
I want to get into it. Like, how'd you get into Green Candle? Then, how'd you get into Bitcoin? And where's it taken you so far? I know you've been done a lot of growing in the past year that I've known you.
Yeah, for sure. So, I guess a little backstory on me. I ran track in college. Once upon a time was a big shot, and then me and all my teammates graduated. We went to grad school, and I was talking to them kind of about personal finance because I was like, we're all going to make money in a couple years, so maybe we should figure out what to do with it. And at that time, I was at Texas A&M, so not far from you guys either. I was driving Uber for extra beer money on the weekends, and I would listen to podcasts kind of in between rides, and that's when I heard Preston Pish before he had the Bitcoin specific show. He brought up Bitcoin, and he had Plan B and Safedine on there. And then I listened to like it was some personal finance podcast. I can't even really remember the name, but she had it was like a female host, and she had somebody come in and talk about Bitcoin. I'm like, all right, this is where I need to, I guess, kind of take a deeper look into this. So I did. I kind of went down the rabbit hole, and then when I graduated December 2018, that's when I got my first big boy job. That's when I was kind of getting into buying every single paycheck. But I didn't really, I guess I'm kind of lucky. I didn't, because I didn't have a lot of money. I didn't dabble too much in the shitcoin stuff. I did trade a little Doge, hand up, I kind of messed around with that. Um, but that was when I was driving Uber and just kind of trying to make my money go a little bit farther. So I was more trading, I guess. Um, I guess back to the whole track thing. Nobody really listened to me and my teammates except for one of them. His name is Dan, and I was just like, look, dude, I kind of want to start like I guess just putting this out there, whether it's like a blog, a podcast, or something. Like, let's just learn out in public. And he's like, yeah, dude, I'm down to start it with you. So I started it like April 21, I think, because we kind of had a bunch of these conversations, like just talking about, Bitcoin, kind of what is going on, macro stuff. And so we started like learning out in public. So I started that April 21. We started mostly with a blog, and then I started a podcast, two podcasts maybe like a year or so after. So I've been doing a podcast, maybe or two podcasts for like a year and a half ish time. Um, and it's brought me to some cool places. I got to talk to a lot of cool people. I've had, I guess the most recent big name that you guys would probably recognize is Marty. Marty Bent was on. I had Samson Mao, Caitlin Long, Lawrence Lepard, Greg Foss, Jeff Booth, like just able to interact with a lot of these big names. And then not only that, I have like kind of like macro related content. So I've been able to manage or talk to people who manage, billions of dollars and kind of go through that. So it's an experience that I didn't really think that when I first started all this is where I would kind of be. But yeah, it's kind of blown up a little bit. So I'm hoping to keep that traction and keep things going for sure.
So you just got back from Pacific Bitcoin. How was that? Did you get any good interviews?
Yeah, so basically my strategy has been go to a lot of these conferences, uh, do like little man on the street videos, like a minute or two or something like that. Stick a little mini mic in their face and ask a couple questions. So I got to talk to some cool people. There's a lot of cool Bitcoiners building a lot of awesome products. Miss El Salvador was there, which was pretty cool. I've talked to Corey Clipston a couple times. Hopefully, going to get him on the pod here soon. Um, so yeah, I mean, there's a lot of big. This. I don't know if you guys have been to very many conferences. I would say this one was like a little bit bigger of like a bit block boom. So it was big, bigger, but not like Bitcoin Miami big. And it was good though. I really was kind of surprised how much I enjoyed California, and because it always seems to get a bad rep, but I think it's more so because of the people there, and I was just kind of hanging around the Bitcoiners, and it's really, really scenic. So it was nice to be out there for like 3 days, and then I popped in, popped out, kind of thing. But yeah, that was a great conference. And then I'm going to adopting Bitcoin in El Salvador here in like, I guess like 3 weeks now. I'm leaving, so I'm pretty excited for that.
Yeah, our buddy Will's gonna be
You're
down
going?
there. Yeah, see you down there.
Awesome. Yeah, we should connect. I'm like moderating a couple panels. I don't know exactly the full extent, but I'm doing that, and then I want to take like surfing lessons on Alzante and do some like fun stuff like that. So yeah, man, hit me up on like Twitter, or I don't know. I could tell G to give you my Telegram or Signal or whatever you want, and hit me up.
Yeah, I'll find you. I probably won't be doing surfing, but we'll link up for sure.
All right, man. Maybe we'll grab a beer or something then.
So yeah, I wanted to get into some of the macro stuff. We haven't had anybody out here talking about that. I was telling the guys it's kind of your forte right there. So yeah, what do you? I guess the first question would be like, what do you think about all the housing stuff? Is there going to be another housing crisis? I saw you recently put on your macro podcast. You talked about that a little bit. So what'd you gain from talking to others? What do you see coming
Yeah.
down?
Yeah, so I see like kind of the real estate market in like two separate sectors, right? So I see, commercial and single family homes. So majority of people kind of focus on the single family housing market. I think like areas like San Antonio, Tampa, where I'm at, where you guys have probably seen a lot of growth, but maybe not the extent as like in Austin or Nashville or Miami, where like those cities have kind of boomed. I think those markets, essentially because of the high interest rates, people were just paying out the ass for houses like 100, 200,000 more than asking and just paying way over. I think those markets are going to come down, and they're just becoming more and more unaffordable. I'm not an expert, I guess, on San Antonio's market, but I'm sure that there's some areas there that are still relatively affordable. They're probably not as affordable as it was like a few years ago, but the bigger issue is that 60% of mortgages now have a 3% interest rate or lower. So at the end of the day, people are not going to try to get out of those mortgages unless they absolutely have to sell a house and then go to like an 8% interest rate. I mean, that's just simply like not going to happen. The same house like 2 years ago is now like, that mortgage price is almost nearly double the amount monthly cost. So housing is definitely getting more unaffordable. But at the end of the day, I think there's lower inventory. So like, because of the COVID boom or whatever you want to call it, like there was a boom in lumber, like all these like kind of commodity prices in order to build homes. The builders kind of stopped. So the inventory has been very low, and it's going to stay kind of low. And I just think that there's not going to be as big of a demand for single family homes. So the one thing that, of course, is kind of connected with housing is, the job market and people's personal expenses. So, obviously, if people sell their homes or lose their jobs, they might have to sell their homes. But because of the interest rates and, that the majority of these homes are at, I think that, majority of people are going to do what they can to try to save and stay in their home as long as possible. personal savings is down dramatically and credit card usage is up a lot. So obviously there's a lot of cracks underneath the surface when it comes to consumer for personal homes. But I don't think that's going to be the main catalyst as it was like kind of in 2008, because I think the lenders and the banking system, you know, obviously we're Bitcoiners here and we don't like the banking system as it is, but I think they learned a little bit of a lesson in 2008. So they've been a little bit more stringent with their standards and their lending, as to opposed to when they were in like 2007, where they were just handing out, you know, $500,000 mortgages to teachers and things like that. But the biggest worry I have is commercial real estate, because, you know, you got to think like cities like San Francisco, New York, Chicago, LA, cities where people really flocked away from, which had a lot of commercial buildings downtown. Think giant companies, right? They moved all their people to work remotely. Well, these commercial buildings, how they get valued at is essentially their occupancy and their rate, their rent income. So a lot of these buildings have, you know, now gotten like 25% occupancy with like, you know, a quarter or maybe even less of the rent that they previously got. So the valuations of these buildings in giant downtown, you know, metropolises have basically either been slashed in half or maybe even more. And there really doesn't seem to be anybody trying to, you know, get into these sites at all. And so, you know, at the end of the day, when it's whether it's that or, you know, people who have decided to build more luxury apartments in, you know, growing cities like Tampa, like San Antonio, where, you know, you guys probably, I'm sure I'm seeing a lot of these apartment buildings pop up in random places. They're going to be tougher to fill at the rate that they need them to fill at, because, you know, that interest rate that they're going to have to, I guess, refinance into, you know, in the next couple of years is going to be, you know, 4 times what they really had before. And because it's going to be so much more expensive, the rent is going to have to increase by, you know, a big margin. And so, you know, a lot of these mom and pop like commercial real estate investors, the few of them, I guess, that are out there that can afford like a couple of these buildings, they're definitely going to go under and they're going to be hurting. And a lot of these buildings are going to have to either be like seized by banks, which we've seen banking has already kind of had some cracks in it, or, you know, they'll get scooped up by some big player like BlackRock, and BlackRock will come in and scoop up a lot of these downtown areas. Or like maybe they'll turn into Amazon warehouses or something like that. But it's something that, you know, it's definitely, I think that's the main, I guess, catalyst in the real estate market that I see now is more on the commercial side of things, opposed to just the single family homes.
What's that saying? You'll own nothing and you'll be happy.
Yeah, I mean that's basically what we're going to at this point, right? I mean, you know, interest rates for personal mortgages are at, you know, not an all-time high, but the highest it's been in like 20 something years. And you know, I don't think that the Fed is really going to be slowing down when it comes to raising rates. So it'll be interesting to see how it all plays out, because obviously there's the added wrinkle here, with the, you know, Israeli war that's going on right now. Um, and so obviously I'm not going to get like super political about like one side or the other thing, but at the end of the day, you know, the United States government likes to meddle in a lot of these conflicts, whether it's overseas and not. So we've sent a lot of money and kind of weapons to the Ukraine. But, you know, when we did that, we sent a lot of like our older weapons, like things that weren't really in use. And Jerome Powell has kind of been able to hold steady, and keep the interest rates at a higher level than he normally, you know, has obviously in the past. And so obviously you're going to have some political pressures, to potentially go through quantitative easing, which is essentially just money printing, to maybe help fund the Israeli war. But, you know, you never know, because Powell has essentially him sticking his foot down and raising rates as quickly as he has and saying higher for longer and not really pivoting. Although the market's been calling for a pivot for this entire year, and maybe not even until like 2025 is what he said. If he's able to do that, like all his hard work that he's basically done and like kind of put the American people through, although, you know, a lot of people think the Fed is is dumb. I think they're kind of trying to put America first and trying to strengthen the dollar. And I think we're in, I guess, a more complex war than just, two countries kind of trying to invade each other. We're having the U.S. essentially pull the monetary arm of things where, we're obviously the dollar is a global reserve currency now. So we're making the dollar harder to get for, other countries, and, making that the global or the offshore dollar market a lot more difficult, killing all the other fiat currencies. Whereas like the BRICS countries are essentially coming at us from the energy side of things, right? Because we have basically made ourselves through the green energy policies like not very self-sufficient and reliant on other countries for things like oil and things like that. And so that's the arm that they're pulling. I hope, like, for the United States sake, we just become more self-sufficient and we're able to, just, I guess, say poo-poo to the green energy policies and, start, drilling for more oil. But we'll see how it plays out, because obviously there's an election next year too. So it's another added wrinkle that adds to all of this.
Now you were saying until stuff might not happen until 2025, with the elections coming up and stuff. Do you see any of the interest rate dropping, or you see them kind of holding steady and trying to keep the ship afloat, to keep votes coming in and all that stuff? What do you think?
Yeah, gotcha. So CPI obviously came in today at 3.7. It was like 0.1% higher than expectations. And it's funny because obviously we all know here, like I'm sure as Bitcoiners, that CPI is very manipulated. So it's not necessarily like indicative as to what inflation actually is. But I think it's interesting that, although as manipulated as CPI is, they're still unable to get that number down to like closer to the 2 mark. So it seems like it's kind of floating steady in like the mid threes to low to like 4% range or so. And so Powell has been very, I guess, adamant when it comes to the rate hikes. Obviously, he raised interest rates at, a record pace. And he's kept them higher, and he's come out and said multiple times higher for longer, that kind of thing. Well, the bond market, if you can kind of analyze that, is now calling, after the CPI print today, is calling for a rate cut in spring of next year. Previously, it was calling for a rate cut in like September, fall time of next year. So they moved that up a little bit, but big preface here, the market has been calling for a rate cut since, like, they called at the beginning of this year, they were calling for a rate cut by this time. And so Powell has been very adamant when it comes to, hiking interest rates, the higher for longer. So I think, Powell is going to raise probably next meeting by 25 basis points. He's going to do this maybe, 1 or 2 more times, I feel. And he'll probably not do it in back-to-back meetings. He'll probably raise, pause for a meeting or two, then raise and do that, and kind of keep rates at a higher level for 24, and maybe start to cut back towards the end of 24, and then like early 25 is when I can foresee, maybe a peel back. But I don't really think we'll ever get back to the zero interest rate environment that we saw, from basically 2010 to 2020. Powell actually tried to start raising interest rates in 2019, but Trump kind of made him go and reverse that, which, a lot of people weren't really paying too much attention to at that time. But the narrative was kind of like the economy was great from that entire decade of like 2010 to 2020, before COVID. But realistically, like 2019, there was some cracks showing in the economy prior to, the COVID pandemic, obviously shutting down the entire world. So I think that, it's an inflationary battle that we're fighting now. And I think that Powell is going to do what he can to keep rates as high as he can for as long as he can. He kind of looks up to Volcker, who is basically known for doing this. I believe in like the 70s or maybe even before then. But yeah, so I mean, I think that he's going to just kind of keep those up, and he's not going to slow it down until, there's maybe some sort of like major crack. Maybe job market just kind of collapses. But the interesting aspect of all this is they look at data like the jobs market. They look at the JOLTS report, for example. And the JOLTS report, if you look at it, reported a ton, way overestimated job reports. I think there was estimating like 600,000 job openings, and there was like 900,000 according to JOLTS. Well, it's a survey-based data set, and like the response rate is under 30%. So you can just kind of see how reliable that data is. And if Powell's making decisions off of that, it's just kind of bad news. But um, this is kind of how Bitcoin is, right? It takes the power out of the people, where we're using data that's old and outdated, that's survey based, that has very low response rate, and then we're making decisions off of backwards looking data for things that'll affect us in the future. So it's overall just like a recipe for disaster. And so, in my opinion, I think Powell raised too quickly, too fast, probably started a little too late as well. And then I think he'll probably, pivot, and either pivot too quickly, where meaning that he'll, pull back the reins really quickly. But he'll start that like pivot a little bit too late. And realistically, when you start to look at, whenever the Fed has pulled back and pivoted and lowered interest rates, generally speaking, in the Bitcoin space, I feel like the narrative is like that would be a good thing, especially for the Bitcoin price. But generally speaking, when the Fed pivots and pulls back, that's when a recession occurs. So take that for what it is, I guess.
So you mentioned we've already started seeing cracks in the banks. What's your take on like how we had those big bank failures this year? Do you think more are to come? Because I've heard a lot of Bitcoiners say, that's just the tip of the iceberg, pretty much. So you think it's going to get worse, in the next coming year? And with the Fed pulling back as well, my mentor brought up a good point. He said when you saw interest rates at zero, what happened? You saw gold all-time highs, silver all-time highs, and Bitcoin all-time highs. So I guess what's your take on, that? Are they tied together a little bit? You think so, or not really, or just, perfect timing? What do you think?
Yeah, so I guess on the bank question, I think that obviously Silicon Valley Bank made all the headlines. If you kind of take a peek under that bank's balance sheet, it wasn't very, I guess, managed very well. Their risk management was pretty poor, to say the very least. I think out of right now, because we're not going to be raising interest rates as dramatically as we were before. Like those were 75 basis point hikes every meeting for a good period of time. That was a big catalyst as to why those banks failed. Now the banks are kind of prepared for it. They've already kind of been in this situation for some time. The hikes aren't going to be as dramatic and as frequent. So I think, as far as like bank failures that we've already seen, I think like we're, pretty close to seeing like basically all the regional banks that have failed from this hiking cycle have failed already. We're going to see like maybe some other ones get scooped up by the big guys, but I don't think that's necessarily going to be because of failure. I think that's maybe that like a JP Morgan Chase is kind of seeing like blood in the water and just is going to go in there and try to scoop some of these guys up. But as far as like the price and the price action and everything like that goes, I'm kind of in between on this because, obviously the halving cycle comes up every 4 years, which coincidentally lines up with like presidential election cycles, which also lines up with like the business cycle, where like if you kind of like zoom out and look at how the overall macro business cycle goes, it's kind of in this 4 year period. So I think that we'll see people, especially in like a recession, flock to more hard assets, which obviously are like precious metals, Bitcoin, and real estate. And real estate might be one that shows like the most cracks and has the highest barrier to entry. So I think like gold and silver and Bitcoin will probably do pretty well, but also if you look at like the charts and you kind of subscribe to the halving as being a main catalyst, well, there's like, I guess one point I have against that is like, over 92% of the Bitcoin that are in circulation have already been mined. So I don't think personally that a market's going to be set by 8% of the rest of, Bitcoin that are going to be in circulation. And I think it's more based on kind of like the macro cycle, kind of like maybe the mentality of people buying in. And I think that, at the end of the day, um, it all just kind of aligns with the business cycle as well. So I think, you know, we'll see Bitcoin. I don't think we'll see an all-time high next year. I think if you look at and you look at the cycles every time after the halving period, the kind of run up starts a little bit later if you kind of analyze the charts. So I think, we'll start to see maybe a run up around this time next year. And then, we'll see probably the all-time high for Bitcoin probably in 25. But it'll also be pretty interesting. I mean, I don't think we've seen Bitcoin really react in in a recession. So it'll be something that I think like we'll have the poorest macro environment that Bitcoin will be in, but the most people ever in Bitcoin at the same time. So who knows, man? I think like, the dollar will be strong compared to other fiat currencies if Powell keeps the interest rates high. Um, but, Bitcoin always seems to dominate these fiat currencies. So I think that, people will start to flock to something like Bitcoin.
Well, we're down to the last 8.5 minutes, so wanted to open up to anybody who might have any macro questions or anything. See if you got any responses. Anybody
Yeah,
got
for sure.
any questions?
What's your safe stack? What's your risk stack? And what's your opportunity stack? Have one.
What's my what? I'm sorry, I can barely hear.
What's your risk stack? What's your safe stack? And what's your opportunity stack if you have them?
Or just
Oh,
all.
okay. Yeah, I like that question. So, I mean, like, I guess, so, I mean, I don't, what do you mean by risk stack?
I mean, like, well, I guess it depends what you define as risk. Like, if you define Bitcoin as risky and cash as safe, so do you have cash or do you have,
Yeah. Yeah. So I
portfolio?
guess like I'll kind of give you guys a peek under the hood for my like overall investment strategies. So I'm in a duplex right now. So I live in a part of it and I Airbnb part. And I'm buying another investment property right now. Basically, my overall personal strategy is I buy Bitcoin and I hold that, and I don't want to ever have to sell that. But I also want to kind of work for myself full time and do the green candle stuff full time. But I don't want to be privy to sponsors where I have to take some sponsor and they kind of influence my content or what I say or what I do, things like that. So I love Bitcoin, but I need cash flow coming in. And so kind of the safest bet to me is real estate, as it stands right now. I don't really believe in like the stock market necessarily as it stands right now. So, for the saving, I guess, perspective, like long term, that's where I'm investing in Bitcoin, I guess is what you can call it. It's more of like a savings account to me is to, just stack Bitcoin as much as possible. And then, I'm buying like real estate properties to, essentially just kind of get the cash flow in. So yeah, I mean, although like I guess I can kind of show maybe the biases when it comes to the single family, like why I don't think it's going to crash. But I think like as many real estate guys as I talk to and girls and whatnot, it's very market to market in real estate, and I really believe in Tampa where I'm at. So yeah, and does that answer your question?
Yeah, yeah, yeah. Basically, like you say your opportunity stack is cash because you need like properties and leverage. I mean, that's how your strategy
Yeah,
is like this.
yeah,
And then,
that's
I
yeah.
mean, if anybody else has one, so why did you pick a green candle? Like, are you big into trading or like why the name?
Yeah, I don't know. I kind of like I didn't want to include, I guess, Bitcoin into it because when I got orange pilled, I kind of went into it with Preston. I was listening to the We Study Billionaires podcast. So my kind of indirect way to get people into Bitcoin is like maybe they hear me through macro, and they want to learn more about, and they hear me mention Bitcoin and something else, so they get curious. But I also kind of want to create, I guess, maybe like the bar stool of finance. So that'll be kind of my indirect way to bring people in. So, I want to, eventually, if I get big enough, get other people who are maybe in real estate or maybe like a stock specific show, some other things. Like I have some other ideas, like maybe talk like money in sports kind of thing, but then all kind of have like a little Bitcoin twist to it as well. So I have big ideas, I guess. So hopefully I can execute on them. But I chose the name Green Candle to kind of, I guess, bring people in and not necessarily think of like, oh, it's Bitcoin and like only Bitcoiners like listen to it. It's more of I care about my personal finance, like growing my wealth and that kind of thing. And that's how I indirectly orange pill some people.
Anybody else? Huh? So I wanted to ask too, because my stepdad had brought it up earlier. Are you, is there any part of you that's worried about like Airbnb, like going a little haywire with all this real estate stuff since you're in
Yeah,
Airbnb?
yeah. I mean, like Airbnb is definitely like I am a little worried about it to be honest, but the way I do my numbers is that, I when I evaluate a property, you get kind of like the monthly payment or whatever. You can kind of estimate that based on like your mortgage rate, all that kind of stuff. I make sure my numbers will work by like a long-term investor or a long-term renter. So like worst case scenario, I bought a bunch of furniture for the place and then I can't rent it out to like, Airbnb, but I could get a long-term renter and I could say either it's fully furnished or I'd have to store the furniture somewhere. Like that kind of goes back to my point about Tampa. Like I think, so many people are always moving here that I don't think I'll have a problem like renting out a single family home. That's nice. And doing that kind of thing. Um, but the Airbnb thing, it is kind of like up and down. Um, so we'll see. I mean, I think like it's the highest upside, and generally speaking, January through May is very hot time, at least in Tampa for Airbnb. So I guess that'll be the tall tale sign. And I think that a new thing that a lot of real estate investors are starting to do as well is like getting, medium term is what they call it. So like, um, travel nurses, for example, come to Tampa quite a bit for like 3 or 4 months at a time. They make a decent amount of money, but they're looking for a place that they can, rent for a little, like a little period of time, maybe not necessarily Airbnb. So I guess that's kind of my interim plan is that if Airbnb isn't working, I'll try that. And if that doesn't work, then I can fall back on the long term renter.
Cool, cool. Yeah. So you said you interviewed Caitlin Long, right? How
Yeah,
was that? I haven't gotten a chance to watch it yet. And can
yeah,
you tell
she's
everyone a
great.
little bit about what she's doing?
Yeah, so she's making Custodia Bank, which is also like not going to be, I guess, an exchange. She explains the difference in the podcast, and she does it a lot more eloquently than I can do. And like, I guess this like little time remaining here, but essentially, like they'll be able to hold, yeah, Bitcoin for you, and then like as a trusted third party if you wanted to do that. And it's a little bit different than an exchange. And they're also kind of trying to become an intermediary between like the Bitcoin space and the banking world. The awesome thing that I think they're doing is that a normal bank, obviously fractional reserved, right? That's like a big reason why Silicon Valley Bank failed was because there's a run on the bank. People started to withdraw a bunch of their money. Where like Caitlin Long's, what they want to do is essentially have like 108% of the reserves in the bank. So like if you deposit $100, Custodia will hold 108. So like there wouldn't theoretically be a bank run. They also kind of want to integrate Lightning, because like every time that there's a Lightning transaction, there's that little fee that you incur. And she believes that, that could be something where, that's how you essentially earn your yield on a bank by holding your Bitcoin on it, by essentially allowing it to help with liquidity through Lightning, which I thought was really interesting because, usually it's like, where does the yield come from? And usually it's you're the product, but that is something that I think, could be something of the future.